Hello, traders. Welcome to my channel, AM Trading Tips. Before we start, thanks to all the Telegram members who subscribe my channel, where I share with you my knowledge and other strategies. If you did not subscribe to our Telegram channel, I hope you join now, so join, the link is below this video. In this video, I am going to be sharing a TradingView very easy secret trading strategy that traders are used in almost all markets, and you can use this one secret strategy to successfully achieve financial freedom through trading. But before we start, be sure to don't forget to subscribe to my channel, like this video and enable all notifications, so that you don't miss on any of our new videos. First, let us discuss the indicators that we will use in our strategy. The first indicator that we will be using is called as the half trend indicator. The indicator is available on TradingView as well as MT4 platforms. Now let's start implementing our strategy by heading to the indicators box and the search field type half trend and choose the first indicator. Make sure that the name of the creator is Everget. Now, you have successfully plotted the indicator. This is how the indicator will look. If you are using MT4 trading platform, then free download the half trend MT4 platform indicator, link given below video description. On the indicator, we can see that there are three lines. The central line is the actual half trend indicator. The upper and the lower lines are nothing but two ATR band that are placed above and below the indicator. For the purpose of our strategy, we only need the central line. Let's make some adjustments to it. Open the indicator settings, then head to the input section. We will change the amplitude value to 4. Remove the upper and lower band by unchecking the show channels option. Now the indicator is completely ready for our strategy. So, when the half trend is blue, we will only look for buying opportunities. On the other hand, when the half trend is red, we will only look for selling opportunities. Now let us talk about the second indicator that we will use in this strategy. That is the RSI indicator. The RSI stands for Relative Strength Indicator. As the name suggests, the RSI indicator shows the relative change in price over a particular period of time. The default settings for the RSI are set to 14 period. Therefore, the RSI shows the relative change in the price over the last 14 candles. For our strategy, we will modify the settings of the RSI to suit us. Hence, we will change the RSI period from 14 to 2. We will also change the overbought level to 90 and change the oversold level to 10. This will give us a fast-moving RSI. Now, we will combine the RSI and the half trend indicator to catch small pullbacks in a trend. I recommend using a 15-minute or a 30-minute time frame. For this video we will use the 15-minute time frame. So what are the rules of the strategy? The rules for a buying setup are as follows. Rule number 1: the half trend indicator should be blue. Rule number 2: wait for the RSI to drop below 10. Rule number 3: enter at the break of the high of trigger candle. Let us understand it with an example. Here is a buying setup. Here we see that the half trend indicator is blue. Hence we will look at buying opportunities only. Therefore we wait for the RSI to drop below 10. Here the RSI drops below 10. So this candle becomes our trigger candle. To enter the buy trade, we will place it by order above the high of the trigger candle. As you can see, the subsequent candle does not trigger our buy order, so we can close the trade, but this candle is also a trigger candle. If you look closely, the RSI is still below 10 on this candle, and the half trend is still blue. So we will keep our stop loss below the low of the trigger candle. For profits we will not keep any fixed targets. Instead we will do something different. We will take our profits when the RSI goes above 90. In this trade we exit at the close of this candle, as the RSI closes above 90. So we made profits here. Now let us look at the rules for selling. Rule number 1, the half trend indicator should be red. Rule number 2, wait for the RSI to crosses above 90. Rule number 3, enter at the break of the low of trigger candle. Here is an example. We can clearly see that the half trend is red. Therefore we are looking for selling opportunities only. So we wait for the RSI to go above 90. Here we see that on this candle the value of the RSI is above 90. So it satisfies both the rules, the half trend is red, and the RSI is above 90. So this candle becomes our trigger candle to enter the sell trade. We place a new sell order below the low of trigger candle. For us to execute this trade, we want the subsequent candle to trigger our entry. This means that if the next candle does not trigger our entry, we will close the setup and look for opportunities elsewhere. In this case, the very next candle does trigger our sell trade. So we keep our stop loss above the high of our trigger candle. For targets, we will exit when the RSI drops below 10. So we exit on the close of this candle as the RSI goes below 10. Here is also selling opportunities. When we are new to trading, we often jump from one strategy to another in search of the perfect strategy that has massive profits and no losses. The truth is there is no such strategy. Every strategy has its own pitfalls. The problem are new traders taking a lot of time to realize this, and they keep on jumping from one strategy to another. The best way to become a consistently profitable trader is to master one strategy. Do not trade 1,000 strategies at one time, instead trade one single setup 1,000 times and I can guarantee you will become a profitable trader. Well guys, that's enough for today, and I hope that this strategy will be useful for you, and that this video will help you to earn more. So if you liked the video, and want more such TradingView video, please let me know in the comments, and don't forget to subscribe to my channel. So, see you in the next video, and I wish you a good luck, goodbye and happy trading.